All right. Good morning. Good morning, everybody. Start of a new week, and it's going to be a big one. I've been saying now for a little while that we're in this rut, that the market is waiting on something and it's trying to proceed with caution. But one of the things about the market when it does that is eventually they just get tired of being cautious, and when they do, they usually just break something, shrug their shoulders and just shake something loose just so that they can get going again. And I think we're getting close to that. This week, we've got rate decisions from around the world, 3 different locations, one of them here in the US with the FOMC on Wednesday. But make no mistake about it, the other nations are more of an unknown than our own nation, which, we've been able to take Powell at his word when he has said, whether we're raising rates or we're not raising rates. And right now, unless they decide that they want to shock the market, there's no way that we're going to raise rates and certainly not cut. So we are expecting a hawkish Powell. We expect him to come out with, some hawkish rhetoric, but it's more about what he says for the next meeting. There's the Fed has said more than once that they have one more rate hike that they want to do this year. And if they're not going to do it this month, then it's very likely we're going to get it in November. But if that's going to change, they will mention that during this FOMC. So that makes it important for that forward guidance that, to be fair, they might not give it. They might not give that forward guidance. So that is something that we need to be concerned about, that we need to actually, consider, is when they come out on Wednesday that they don't provide the guidance that the market is looking for. And then we have to ask, how is that going to affect things? Setting aside FOMC for a moment, IBD, Investors Business Daily, every year runs these little specials. And for this current week, one of their most premier and expensive products is free for the entire week. I love free, and I love this product. For 1 week, you can use MarketSmith, and I'm not getting anything for telling you guys about IBD. I just think they're a great product. Well, right now, this one product is free all week. And I mean, what's the harm? So definitely swing over there and check that out. If you're a swing trader or a long-term portfolio buy and hold kind of person, access to this tool for 1 week gives you a chance to look at investors' participation, which is one of the signals that they look for. And I don't think it's current for every single stock out there, but when they get fresh data on investor numbers, they put it into that MarketSmith, and sometimes it's updated weekly, which is fantastic. So you'll be able to look at a name, say like Google, and ask, are more investors getting into it? And it's institutional investors. So, the number might have been 400 last week. Now it's 410 this week. Maybe it was 390 the week before that. You can see that increasing investor participation from an institutional level. That one little bit of data right there makes it all worthwhile. It also does other things, it'll scan for patterns like cup and handle and all that. It's got great stuff. But the one thing that makes it all worthwhile is that increasing investor participation, or decreasing if it happens to be going the other way. And during this 1 week, what I encourage you to do is take your list, the thing that you like to trade, whatever your list is, and stick it into that MarketSmith tool and get all the information that you can on the companies that you like to trade. And it won't hold you for a whole year, but it might hold you until IBD comes out with another thing. Usually they run something like a 2-week plan for $7 or a 1-month plan for $7. And those are fantastic too. Don't get me wrong, but it's hard to beat free. Right. So I just wanted to mention that. And someone brought that to me. So you know who you are. Thank you. I appreciate it. So September 18th through the 22nd, the week ahead, I went over to Seeking Alpha and I grabbed a couple things from over there. They run this weekend breakfast, which is kind of great. It's a list of what's on the horizon. So some of the things that we have on the horizon this week is there is still a government shutdown looming on October 1st. So if they don't get their cards in order, we could see a government shutdown starting as early as the 1st of October. And that is no joke. It's right around the corner. And it ties in with that Moody's rating where we lost our AAA credit rating. Then there's still the United Auto Workers Union. That strike is going still. Last week, we talked a lot about short interest stocks in the pot space. Short interest levels on coals is elevated. That got picked up, kind of hit the radar over the weekend, and EOSE, which is energy. And then the options volume is higher than normal on Nikola. So it was high enough that it actually hit into the rankings, which is interesting. I see that I forgot to post the link. I think I put it there and I never hit enter. So if the options volume was high enough to trigger, then you know it must have been some pretty high volume. So that's worth checking out on NKLA. And then think about where that name come from, right? What space it belongs to, and what we expect to do with it, right? So since I forgot to post the link, I didn't hit enter and the link was just sitting there. I'm gonna back up just a little bit. Investors Business Daily has MarketSmith free all week. Someone brought that to my attention. You know who you are. Thank you very much. This is a big deal. Investors Business Daily has fantastic tools, but every one of those tools costs you something. In this one tool, they have something called investor participation, and it will tell you whether the institutions are continuing to get into a name or if they're getting out of a name. And that is the most valuable piece of information that you can ever get your hands on for swing trading and for long-term trading. So since it's free all week, the recommendation is grab your watch list or your trade list, whatever it is that you generally focus on for swings and long-term stuff, and stick it into that MarketSmith and get all the information on your companies that you can get. You can't beat free. And this is usually a very expensive product. So, you know, take it while the getting's good. They have some reasonably decent educational stuff over there too, which, you know, usually my recommendation is when you get access to something like this, grab all the information you can and sort through it later. You know, just open yourself a private Discord, shove all the information in there, and then just disseminate it at your leisure when you're no longer on the clock to get done with that free whatever it is. All right. So that's a good little bit of advice. So take advantage of this. They also generally offer trials. A little tip: don't run any of their trials while you're running this free event. As much as you think you can multitask, you probably aren't as good at it as you think, right? And I'm saying that myself as a just straight up nerd. You will get more out of things if you finish this event and then you use one of their trials afterwards. So don't try to pile it on all at once. You'll just waste it. Okay. We do have rate events around the world. In the US, we got FOMC on Wednesday, but we also have Japan and England on the docket. So just kind of keep that in mind. There's a government shutdown looming on October 1st if they can't get their cards in order. And then we still have the United Auto Workers strike. Individually, these are bricks of worry, right? Bricks in the wall of worry that we got to really keep our eye on. Short interest levels are really elevated in coals. That fits the retail discussion we were having last week. And in energy, which is kind of interesting. You know, energy's been doing good. What's up with this company that it's high on the short interest, right? And then Nikola triggered high options volume, and it must have been pretty high to hit this trigger, because this is from Seeking Alpha that I just read right there on that out of this Discord here. So it must have been pretty high. Nikola's a part of the EV space. It's worth taking a look at what's going on with Nikola, right? So just a couple of things kind of point you in that direction. On the week, Oracle's going to do this 4-day event. It's a really big deal. And UBS Bank has tipped off that Oracle shares could get a boost from a constructive update. So again, that's from Seeking Alpha. Usually when they throw that in there, it's because they've talked to somebody and they've got, you know, a pretty good heads up. So that's something to kind of keep your eye on. Uber is going to be a part of that event, giving the keynote address. Then on Tuesday, Pens is holding an investors event. There'll be Q&A on that. And then Fortis, Investor Day, PTLO, and IonQ. Now, IonQ has been one of my buy names, right? That thing was a fantastic play this year, but they're having an event, and that's all on Tuesday. At noon on Tuesday, CrowdStrike is going to give a talk on the future of cybersecurity and generative AI, blah, blah, blah. So CrowdStrike's going to be out there and in everybody's face. Wednesday, not only do we have FOMC, but we've also got FedEx and General Mills. Now, you might think that those two names are boring and that they don't matter, but you're absolutely wrong. These two names are huge. They're really important for completely different reasons. General Mills ties in with food, grain, and global food and grain. Okay, so that's a big one. Usually they'll come out and they'll talk about that as part of their earnings. So it's really important to listen to, especially when it comes to, say, Ukraine and grain shipping and Russia blocking all of that. There's this whole big fiasco when it comes to commodities, including food and grains. So that's a big one. FedEx ties in with its own major impact in the markets, including, you know, shipping from shoppers. You know, the whole idea of, is inflation keeping people from buying things? It'll tie in with Amazon, whether Amazon likes it or not. So these two names on Wednesday alone have enough power to really impact the perceived outlook, you know, going forward from here into the end of the year. And then, of course, on that same Wednesday is FOMC, and Intel is going to hold an innovation day on that Wednesday. Boston Scientific, which has been a name that's come up a lot this year, is having an investors day. CrowdStrike again. So on Tuesday, they're out in the public space, and then again on Wednesday, out into the public space with ExxonMobil also on Wednesday. And just not to be outdone, Microsoft and Amazon both are holding an event on Wednesday. This is Microsoft big thing of the year. So they're going to be coming out, you know, kind of pressing more on being a little bit of the AI stuff. Azure might come up. Then devices are going to be a big deal. Just like Apple with their iPhone, well, Microsoft, you know, with the Surface and with Windows and software like 365. Amazon has that Echo Dot, and the Kindle Scribe came out last year. So we'll see what they come up with this year. Could be some new stuff on the Fire TV as well. And then there's a some FDA decision on GSK, which is another name that's been really big in the last month or two. GSK, if you look at their chart, is just exploded. All right, so all of that this week. It's going to be a really big week. And the things that are going on in some of this have the impact to really shape the rest of the year. All right, so looking at what we got around the world, we were in the green just a little bit. Oh, that's gone. So we kind of faded back off again. Hong Kong is down the most. Follow that up with Europe and then Germany, or excuse me, Europe and then Japan. Then we start getting into the NASDAQ down the most at minus 0.25%, the S&P, the Dow, and then small caps. It's interesting to see the rank of that, right? Because it kind of gives us a little bit of idea of what's going on out there. Small caps will be that dash for trash, the penny stock stuff, the short squeezes. Follow that with the Dow 30, that's your mega market cap blue chip, you know, your best of the best, household names, recognizable companies. And then tech being down the most out of those. So if we were thinking, you know, growth versus value kind of thing, right? We are going to start getting jobless data this week as well on Thursday. And the Fed is coming out with speakers. As soon as the FOMC is done, we've got 2 Fed speakers already lined up on Friday. And of course, we got additional auctions and some housing data come out. A busy, busy week. So for today, we do have additional auctions at 11 and 11:30. And we can see even Australia's got a decision tonight, right? Well, it's not their decision, it's their minutes from their decision. So another really big deal. It'd just be like, you know, after we have our FOMC, a couple weeks go by and they release the minutes. That's what's going on here. That'll be tonight, though. It won't be during our trading hours. We do have a European Central Bank speaker today, too, at 10 o'clock. Oil prices have risen 11% in 3 weeks. Just kind of keep that in mind. That's a big deal. All right, and just for some levels on the S&P and the ES futures, one level of concern that you really want to keep your eye on is the 0 gamma level. That's not what I want. There it is. This one. The 1-day implied move is 0.82. So the reason that number becomes really important is if the S&P moves to that number and gets below it, they'll start selling into selling, right? That's that intraday number of concern, right? That kind of line in the sand. It's what's happened when you see the market on a day-to-day basis. Say we'll use a downside move just because that's what we've been getting. When you got the S&P and it sells off into lunch, and then we kind of just stabilize around lunch, maybe it tries to go up, and then it really dumps. It's when they make that decision that they're going to go ahead and press short. But usually that sell-off that pauses around lunch, it's this distance where it stops, whatever the implied 1-day move is. It could be 0.65, 0.82. Last Friday, it was 0.55. So we never quite know what the number is going to be. But usually when it gets to that distance, it's where it pauses. And then they see, you know, are they going to monetize there and then do a rug pull, or are they going to really press short, or if we had gone up, are they really going to press long? Generally speaking, if most people don't have access to this, right? This is spot gamma, which is a fantastic tool, but it's not cheap. You can use something like the ADR levels, right? This is one thing that we've been doing, is keeping track of the daily ADR levels. And when we get to the ADR half, that's generally the line in the sand where the market pauses. And if it gets beyond that, then it really goes and it makes the full ADR. So you don't necessarily have to have this, but I do have it. So that's the number we want to keep track of. If we get down more than that, then it's very likely that we'll just keep going and press, at least another 50% of this, right? Which would put us down about 1.2%. And then, of course, we could make a full 100% move of this, which would put us down about 1.6 to the downside. So it's a number worth watching. It's not the 5-day expected move, right? It's just the 1-day expected move. All right, so looking at the volume, we're well within our range. Somewhere near 100 is fine. If we're below 60 or 65, then there's a little bit of a liquidity issue, but otherwise, we're not too high, we're not too low. It's kind of Goldilocks. It's just right. So volumes are basically normal. And it's worth noting how absolutely tight this range was before we just broke out. Now we consider this unfinished business. You could even consider it a liquidity gap at this point. Right now, just keep in mind, we had one back here too, and that gap didn't fill. So just because I'm calling it a liquidity gap doesn't mean that we're going to turn around and go right back up to it and get it closed. Just generally speaking, that's what we see more often than not. The stronger the gap, liquidity gap, the stronger it is, the more likely we're going to go back to it and get it closed first before we do anything else. But we were in a really tight range. Call that the IB, the first 1 hour of open range, and then the overnight session in that really tight range. It's unfinished business. It shows that if they've got any work to do, they haven't started doing it yet. We're underneath the weekly pivot point, and we are underneath the daily pivot point. We haven't touched it either, which makes it an MDP. It's a missed daily pivot. We're underneath the 10-day moving average and the 20-day moving average. So, if we're looking for a move to the upside, we've got a lot of work, a lot of resistance. We just broke through last week's low and yesterday's low. So now we're inside day breakout to the downside, which just adds to all of that resistance. We are getting closer to this blue line down here, which is the 10-week exponential moving average. So at least we have that to look forward to if we get to that red line and we get past it. So I did mention that we've been keeping track of these ADR levels, and today's no different. So I want to capture this level and move this line forward. I still haven't come up with a way to auto plot those more than just a single day. Not yet anyways. So that's the low. I guess it was right there all along. And that'll be the high. All right. So that's what we're working with right now. Kind of consider something that when it comes to starting a new week, this is a little bit of perception that I generally favor. I would rather gap up on a Monday, or excuse me, I would rather gap down on a Monday than gap up. And generally, it's from this idea right here. So we closed on a Friday there. We gapped down there. And then we started that move. All right. So, you know, it's not a perfect science by any means, but if you look at especially the S&P, when we gap up on a Monday, it's usually one of those fake out breakouts. You know, it's the last hurrah before a dump. And I'm reading this really good book right now on the S&P, no less, where it talks about this span of years where the S&P made, I don't know, let's say it this way, the Dow made 800 points that year, whatever year, and it was back in the 90s. And they were comparing what would happen if you had bought those breakouts every time it broke out. You wouldn't have made money. Out of that entire 800 point run in the Dow, you wouldn't have made money. You either had to be a buy and hold through all the pullbacks, or actually buy when we were breaking below key levels. So breakouts on the indexes, statistically, they're not what you want, right? You want it to gap down and catch it on the low and get the rally up. So Monday, gap down, it's not a bad way to start the week. It just needs to have a little bit of control, right? We don't want things getting all out of control and breaking key levels on the first day, right? So the ADR half, 44.75, we'll look for stability around that level. And the divergence between the S&P and the SPX is done now, right? Some of the issues with that last week was really throwing people off, but that it's done now. We're past that point, so we shouldn't have any issues. You should be able to correlate and see the S&P, the SPX moving just like the SPY again. Looking at the SPY, by the way, my level isn't there. It might have to wait until a little later in the morning before it pops up. We'll get it later. Yeah. There is a market maker move, by the way, this morning, right? So we take the expected move for the day and we add that market maker move to it. Oh, I say that now I don't see it. So we'll just check to make sure we can validate that market maker move. Yeah, it's kind of close, but no market maker move yet. If this number in the front here gets higher than that next number out, then we'll get that market maker move, right? So those two numbers are what you need to keep your eye on. 10-day, 30-minute volume profile. When we're at the highs, we expect to go to the lows. When we're at the lows, we expect to go to the highs. We're underneath the point of control and we're at the lower end of the chart. Do not expect this pivot point from a couple of Thursdays to go to help you with anything, right? We're not looking at this thing as any sort of support. Nothing like that. It doesn't even have any Darvis methodology to it. I'm using that phrase lightly, but it basically is a reflection of, has it been tested yet? Right? It's not generally how I consider using any sort of Darvis method, but it is becoming more popular. And in 3 different articles that I've read in the last month, they've used that phrase. I don't know, maybe they're trying to change how the Darvis method is perceived. But the way that they're using that phrase is just mean that it's been tested and tested previously and it held. It's on a Darvis level. Okay. Who am I to argue? All right, you can see the really high concentration of volume before this breakdown. We're underneath the point of control. We had a VPOC from Friday, but it got tagged at 3 a.m. and now we've broke through it. So there's no reason to really draw it out at this point. Having said that, though, a lot of times I will keep the VPOC on the table for the entire day, even though it's already done for the day, right? Mainly just from a perspective of, if we get back to this spot again, are we going to see any reaction out of it? You know, and remember, these aren't support and resistance. They're not areas that we expect is going to hold up the market or anything like that. It's more of just that perspective of, if we get there again, do we have any expectation of a market reaction? And so for the day, it wouldn't hurt to just leave Friday's levels on there, and it just wouldn't be considered a VPOC, right? Because it's no longer V. It's just a point of control. That way, if we do go back up into that general area, it won't be much of a surprise if we interact there and maybe hit some sort of resistance, right? Or maybe get some sort of first touch play like that. Really amazing move like this, right? That we first got. It wasn't support, it was just an area of interest, and it would have offered a fantastic first touch play. All right, on the week. As much as that move looks extreme when we're in the smaller charts, looking at it on the daily, we're not getting all excited and making big dropping moves and anything like that, right? 44.84 likely to be a level of concern. We're far away from the edge of the weekly expected move. So we've gone nowhere and we've done nothing yet at this point. Minor expansion. One thing that we can do is measure Friday's levels and plot them to the downside, kind of give us a little idea, you know, of targets and ranges. So the 111, it's what I consider the warning center, would be 44.86. We didn't hit it to the penny, but we got pretty close to it. Got a little extended from VWAP, and it just looks like a little bit of mean reversion at this point. Careful though, this move back up could be nothing more than a little bit of whiplash before continuing its move to the downside, right? So just because we're going back up doesn't mean that we're rallying. It very likely could just be some mean reversion. And it doesn't help to consider what made the drop in the first place. Nothing really standing out news-wise. If it was something big, they'd have it in red, right? They'd have this big kind of, yeah, it looks like that. And we're not seeing anything that looks like that. $8:15, 8:30, 10 o'clock, 11, and 11:30. Remember, on one of the economic pages we were looking at earlier, there was an 11 o'clock. So one of these is wrong, either the website or Thinkorswim. And as much as I love Thinkorswim, my money is on Thinkorswim being wrong here rather than one of the websites. All right, the VIX is up 6.5%. Bitcoin right behind that. Biotech, airlines, nah, scratch that. It's just Bitcoin, and that's it. Bitcoin. That's not enough. Not even remotely close enough. Let's go the other direction. Nat gas is down the most, and then financials behind that, and semiconductors behind that. So just about every major sector, including the China ADRs, no less. So from the least to the most, tech, building materials, financials, the China ADRs, staples, the FANGs, real estate, semiconductors, and then regional banks. Oh, and finally nat gas. It's a just red across the screen. And if we're going to see any kind of turnaround, then it would have to be a rising tide, right? It'd have to be across the board in everything. All right, so we can see semiconductors getting hit pretty good. If we take that out to the daily and kind of get a look at it, we are now getting through this massive double bottom from August 18 all the way to now. Let's kind of update those trend lines. We've got some angled trend lines underneath us. So we could find a little bit of support maybe later in the week. Just remember the double bottoms are bear traps. That's what they're designed to do. That's what they're supposed to do. They're supposed to convince you that we're really going down. So if it doesn't look convincing, it's not much of a trap. Unfortunately, however, it will look the same way if we really are breaking down and continuing to fall. So a bear trap looks just like the real thing. And you'll only know that it was a trap if it bounces and goes back up. So we mentioned the China ADRs, but we've also got FXI. It's a China large cap ETF. We are trapped between two major zones. And we got perhaps a little minor double bottom, but the bigger one is back down to that August 21st low. So there's really nothing here to help this thing out. Utilities as well, same discussion. Now, this is an ugly cup, right? And cups aren't supposed to form in the middle of a zone like this, so we'll take it with a grain of salt too. There could be an argument made for a daily head and shoulders inverted. So we got left shoulder, head. But if that's the case, we're really looking at like November and into December before that head and shoulder plays out, because it's a really wide head and shoulders. So that's not really valuable, right? I had someone ask about that over the weekend. If your pattern has formed over, say 4 months, then the follow through of that pattern is very likely also going to take a couple months. You want the ones that are all tightly condensed and has formed in a small period of time. So it's not to say that this head and shoulders won't play out, just that, it's not going to be like a day trade kind of thing. It's going to take some time. And if it's going to play out, it would also still need that weakness, right? We'd need to at least get below 64, and getting back down into that 63 area would make more sense. That way the head and the shoulders and all of that is more uniform. XLF as well. So if we're using just some basic higher highs and higher lows, we've got 2 out of 3 to reverse this trend. A trend is valid when you have 2 higher highs and 2 higher lows. So we need this low, and it's only going to be valid after we turn around and we go back up again. Then we'll have that pivot formed. Until then, we are in the middle of a range. This previous zone didn't hold, and the next one's a long ways down. So we really don't have anything to lean on for XLF. Industrials, I didn't even count how many days this is, but it was nonstop selling in this thing for a while. So, talking about shifting the money flow, we tried to stabilize a little bit. It looked like we were going to make another run back up again, and all of that failed. So we're watching this low close, that 104. And if that breaks, we do have lower trend lines, but I'd say the round number of 100 is what I would focus on. It seems simplistic, but round numbers works for a lot of reasons. One, you'd be surprised at how many people hate math, and it's just easier to do math with round numbers. It seems like a really silly thing, but nobody said the market is a rational place, right? And then healthcare. Also sitting on a trend line, having a micro double bottom near. And if we were to look at classic technical analysis where we had a trend that was going to the upside and we set a high, we set a higher low, but then we failed to get that equal high, right? So then we would have been looking for a breakdown here, and we didn't get it on this pivot. So this is a complex top, right? You got your swing high, your swing low. This would be a complex swing high. If you were to Google just that phrase, you'll get a couple of images and probably a couple articles, maybe a video or two on what a complex swing high and a complex swing low looks like versus your regular swing high and your regular swing low. So this didn't follow through the way that it was supposed to back here on the 24th, but we are continuing to get those lower highs, and we did get our lower low eventually, just after a little bit of shenanigans back here. Let's take things in the other direction and look at what's up today. What's pot stocks, gold miners, precious metals, and Bitcoin. Now, Bitcoin was tight correlation with the NASDAQ earlier in the year. We're talking like, 70%, not right now, but earlier in the year, which was fantastic. We take it when we can get it. It's just not so much. And thanks for the reminder on that. I just seen IPOs on the corner of my eye. Pre-COVID, there was a fantastic IPO market. There was things coming out all the time, and we had all these exciting ideas, and then it all just stopped, and there really wasn't much IPO play. Last week with ARM kind of got everybody all excited, and this week we've got another one, that Instacart, but by no means that's not all, right? There's definitely more coming, and there's also a big event this week. It happens every year, and it's kind of newer, so it might be a little bit underneath people's radar. It's called oh shoot, of course, now that I want it. Let's see if I find it real quick. This event is kind of a big deal because it's where new companies can kind of come out and get debuted on the public stage. And I think it ties in perfectly with the whole IPO kind of resurgence. I'm looking. Well, I'll have to circle back to it because I can't find it at the moment. But there is an event this week with new companies that are going to come out, kind of present themselves to the world. And I think it ties in nicely with the IPO stuff. They're not coming out as IPOs. They're just kind of getting public attention. And I don't know. It's a yearly event. I'm a little bit of a nerd. I kind of like it, but I like getting access to new tech and new companies, new websites, products, tools. So for long trades today, for anybody just running shares, say, you know, not really doing options kind of plays, precious metals, pot stocks, and Bitcoin. With the Bitcoin, let's kind of follow that up a little bit and see if it's any of the proxies. So we've got coin. Oh yeah, it's definitely getting into the proxies. So this is coin. It's a Bitcoin proxy. Up this morning, testing Friday's highs. Let's look for a Thursday breakout on this for a continuation. If we look at it on the daily, we had this kind of a bear pennant. And if it wasn't so angled down here, we would just call it a bear flag. You can still call it a bear flag. It's not going to hurt anything. They both represent the same thing, right? A bearish market that's supposed to continue to the downside. When it fails, which is one of my favorite strategies, bear flag failure, is when we break through the top and we end up forming this really big cup, right? Because then it leads to a cup and handle, which leads to a breakout, which leads to a trend to the upside. But it all has to start somewhere, right? So if this bear flag fails and we do run back up, there's your cup, get the handle, you get the continuation. We just need to get out of all this mess, right? So we can measure last week's, I guess it's August 29. We can measure that really big candle. It'd be that earnings candle, plot that upwards. There is the phrase, if 80, then 100. I don't know if it applies now. It applied more, you know, back here when we were on our way to 100 the first time. Well, you know, the first time this year. So we came from that. Don't know if 80, then 100 still applies now, but I would be focused on measuring that big bar, plotting it out, and using those for my levels upward, with 100 being, you know, a hard level to get through. We got through it last time, but it was earnings, right? So, well, I don't know. That might not have been earnings. Let's go to Thinkorswim. Yeah, that wasn't earnings. The other big bar, neither one of those big bars were earnings. Doesn't matter. Let's clear all this junk off of here. We want to measure this big bar and plot those levels. So we closed at 82.15 and we're at 83.50 this morning. We're just above that 786 line. We need to break out of Friday's level and challenge that 86.26. And then if we do, then we've got things to work with, right? 87.71 and then 89.35. That'd be our first stop. We can get there and then maybe reevaluate. So coin is one of those that are doing good this morning. Ties in with Bitcoin being up. Riot would be another one. It's another Bitcoin proxy. So we're already inside day breakout from Friday and Thursday. and really all of last week. So we take that out to a weekly chart here. Last week's high, 1165, or excuse me, 1124, because the new week isn't printed yet. So we're not seeing any candles here for the new week yet. That's the way Thinkorswim works. Needs to get back above 1124 to keep that inside week breakout. That's also a 50-week moving average. So a lot of resistance. We're not looking to, run these things back up yet, but we are poised for this massive TRB, right? Trendline breakover. And one of the reasons that I like a trendline breakover is because you get these massive days, right? It's not just the idea that we could run it back up. It's the idea that when we do finally get the breakout of this IX10, we could run it back up in a single week. It sounds fantastic, but this thing is known to be a mover, right? So it's not too much of a surprise. So we talked about Coin, Riot. Mara is another one that fits into that space. You can see how Mara is doing this morning. It's up since Friday, inside day breakout from Friday. We're still stuck inside Thursday's levels, and we do have resistance to deal with from this big bar, right? It's the bar that we measured a couple weeks ago. So we're up off of the lows. It's a 50-period bounce. Last week, we hit that 50 period and came up off of it. We're turning red to green, which is a really nice way to consider. We closed last week down here, and we're up this morning, not at this level yet, but we're pretty close to it. We want to get back above and then get above last week's high and get it into this level and up and up and up. So it's looking pretty good so far for the Bitcoin space. See if it bled over. It's even in HUT and in Hive. So it's across the board. There is a correlation with Bitcoin and semiconductors. But that's obviously not helping out this morning, right? So if we go in here and look at the Bitcoin proxies, NVIDIA, PayPal, AMD, Square, TSM, none of those are doing good this morning. But we look at the other side of that, we got Mara, Riot, BITO, MSTR, we didn't hit that one. That's, yeah, okay, it's up, but compared to how the others looked, this doesn't look so hot. GBTC had a nice breakout, but it's already pulled back off of that level too. So that's not so fantastic either. And SOS, not at all, right? So yeah, I think Mara is one of them that's doing the best. So we know we've got the crypto names moving. The other one's pot stocks. Yeah, okay, that's not very encouraging. MSOS isn't doing all that hot. And MJ. So yeah, not enough in that space. I'd say it's Bitcoin. There was some precious metals. Okay, yeah, we got a little bit on gold. and silver, although it looks already like silver is giving it back. And energy is starting to give it back. So a nice topping pattern here. You talk about being overextended. USO is just a kind of a representation of the energy space, right? It's crude. So we get that topping pattern here. If we finally start to go, we could get a decent pullback to at least a 786. Just doing it regular, a 618 level, if we wanted to use that, would be $77. I think I like my level better, which is 786, which would probably put us somewhere around that $78 mark, $79, somewhere right around in there. So we're not talking about oil, completely getting wiped out, just a decent pullback after a really nice run, which is what we would expect it to do. All right, this is going to be your number one focus right there. See how really tight the Dixie is, the DXY, the dollar index. We break this range to the upside, expect more pressure and a negative S&P. And if we break this range to the downside, then expect the S&P to rebound off of these lows and try to challenge Friday's levels. It really is as simple as that today. Keep in mind, the market doesn't owe us anything, right? It's got a lot on the table, especially when it comes to what the Fed is going to do with that forward guidance. And if they're going to raise one more time this year, like they said earlier in the year that they would, if they predetermine, in advance that they're going to raise rates one more time this year, the market is going to start pricing that in and looking beyond it, because they'll look at it as that's the quote, that's the last one. That means a lot. It's the weight behind it that means a lot, right? So we could see that explosion to the upside starting next week. I still think that's a little early, but most analysts and economists are looking for the S&P to get back to 52-week highs by the end of the year, not to be pressing into the lows by the end of the year. Right. So it's really something to think about, is when is that going to kick off, and what's the catalyst, right? What's the new narrative? So watch the dollar, follow that up with the 10-year. That thing gapped up really strong last night in the overnight hours. And sure, it looks like it's kind of pulling back off of that high now, but we were at 4.35, right? So let's see this thing settle down a little bit. Not in one day, but we really want this thing back below 4, right? What we don't want to see is this thing above, say, 4.35. And then that weakness in US dollar Japan is what is helping gold and silver and all of that. So if this low holds and US dollar Japan begins to rally back out, then we're going to expect to see gold and silver make those moves to the downside. Otherwise, we want to see this get below that 147.50, which would be a 1, 2, 3, 6 fib retracement anyways, if we break this low back here. So just nice and easy, no big sudden moves. This really tight range here and here is what's making me nervous. And I think it's one thing you got to watch close. Things that'll give you the catalyst to go with it is something like this. Oil continuing to press higher, looking like some kind of blow off top, but it just keeps going and going and going. Everybody, what a week, huh? What a week, and we're just getting started. Be careful, be safe. I'll see you all tomorrow.